Here to discuss is Emily Partner, Senior Strategic Advisor at CoinCheck, and Cosmo Jiang, Portfolio Manager at Pantera Capital. Welcome to both of you. Emily, I just wanted to start with this point that Yardeni Research has made. And they say, and this makes sense with the strategy's peak, that it was the Genius Act that destroyed Bitcoin. My words, not theirs. Once it became the case that stablecoins were enshrined as part of the financial system, the use case for Bitcoin, the intermediary case, disappeared. Now, this Genius Act was passed last July. Strategy's all-time high was last July. So what happens to Bitcoin now?
Yeah, I don't think it was the Genius Act that messed up Bitcoin. I think some of it was actually the surge in gold, because the surge in gold kind of undermined Bitcoin's whole narrative as being digital gold, because gold has outperformed Bitcoin in the sense that it's been acting more as a hedge against global instability. You know, it also has limited supply. And I think that's been more what's undermined Bitcoin's narrative. As for what's happening in Washington, I mean, we've discussed this a lot on the show. I mean, Washington has, you know, they're still waiting for the Clarity Act to pass. It hasn't passed. I don't think that's what's going on right now. I think Bitcoin is very much a narrative-driven asset, and we've kind of lost the narrative, and I think that's what's causing the panic.
Cosmo, what revives the narrative? And you know it's gotten bad when people are starting to ask whether companies like Strategy are systemically important.
Totally. Look, when things are down, sort of all the bear cases thrown against the wall, and it's very easy to forget the bigger picture, which is that clearly, yes, prices are down, but at the same time, you know, fundamental adoption has been increasing, and the industry has been proving this out. You know, eventually, as I say, price does follow fundamentals, and that's the opportunity. Right now, people aren't seeing that, but, you know, every day we hear of new financial companies getting into digital assets, whether that's JP Morgan launching their tokenized deposit, whether that's Robinhood doing tokenized stocks, whether that's Western Union doing stablecoin payments.
Right.
And so we're pretty excited about the longer term view, but undoubtedly people are a little scared right now.
But we shouldn't sort of lump this all together. You know, what JP Morgan's doing has nothing to do with the price of Bitcoin, and in fact goes back to the argument that as Bitcoin went mainstream, Bitcoin lost its narrative. So where do you see that the price of Bitcoin has any intrinsic value that could help people get a sense, other than, I mean, if you want to just value it on flows, that's fine, but even the flows that you're describing are not flows into Bitcoin. They seem to be flows around tokenization.
Yeah, that's such a good point. I just want to jump in there. First of all, the tokenization narrative is much more about Ethereum. It's not really about Bitcoin. I mean, there's something like over $163 billion of stablecoins that are running on Ethereum or circulating on Ethereum. So if anything, that should be driving up Ethereum's price. It's not. As for the Bitcoin use cases, I mean, even if there are fundamental use cases out there, as you just said, if nobody's seeing them, do they exist, right? And I think, Kelly, what you just said is so right about these fundamental narratives that have been undermined. You know, Bitcoin, in theory, it came into the world to be an alternative to Wall Street, to be an alternative to governments. And then so much of what's been pushing up the narrative of Bitcoin over the past couple of years has been either, you know, oh, the U.S. government supports it, or it's ETFs, which is, you know, fundamentally an intermediary, or it's institutional investment, which is Wall Street. And so I think now that those things are not pushing up Bitcoin's price, there is sort of this crisis of confidence, which is like, what is the narrative now? And I really think that's the core issue here.
Cosmo, you want to jump in here?
Look, I do think there's a really important distinction. There is when we think about digital assets, everyone kind of lumps them into, or lumps crypto into, and when they think of crypto, they think of Bitcoin. But we, as an investment firm, we do think of as there's Bitcoin, which is digital gold, and then there's everything else, which is blockchain and technology. And, you know, all the tailwinds really are in blockchain technology. When it comes to Bitcoin, I do feel strongly that, you know, it goes through these cycles from time to time, and eventually people will realize that, you know, Bitcoin is an amazing censorship-resistant store of value. That's getting lost right now while we're seeing this incredible run by gold and going in the other direction.
Yeah, I think, Cosmo, it's also an open story. You know, if Bitcoin went up to 126,000 and stayed there, more of the institutional players would feel comfortable putting their money there. Now that it's fallen by half, that story's changing. And it's hard to see an adoption story that's going to be more bullish than the one we saw over the past year. I mean, I'd argue in a way the industry got used, right? Like they were told, oh, yes, you're going to get everything you wanted. And it turns out getting everything that they wanted resulted in the exact opposite outcome for the price of Bitcoin, not for the infrastructure tools. Stable coins, all, full speed ahead. Tokenization, full speed ahead. Price of Bitcoin, dropping.
Yeah, and I think that's part of why. I think that's part of why real-world asset tokenization, as Cosmo just said, is kind of booming right now because it's a real-world thing. It's more. It has more of a tangible use case. I mean, we talk about use cases. I mean, I don't think this is what's driving up gold's price, but you can use gold for things. You can wear it. You can make it into a necklace and a bracelet and earrings. And I think, like at this point, there are very few people that know anyone who is paying with Bitcoin and who can point to tangible use cases. And I really think that is part of the issue here. That when the price starts to fall, and you can't just keep saying, well, institutions are buying and the government is supporting it. It's like, what do you point to as the reason for Bitcoin's existence?